What if, instead of being a price error, the largest error XRP investors have is a psychological one? Most of us are looking at charts, emotionally responding to the lack of movement, to short-term volatility, and to daily headlines, while there seems to be a much larger story developing hidden away in the background. There is growth in institutional infrastructure. XRP Ledger's tokenized assets are moving at a brisk pace. The liquidity of stablecoins is rapidly increasing. Large financial companies are implementing systems that use Ripple. Yet, amid all of that, many investors are letting their patience run out as long-term believers say the real use stage could be now. The common thread emerging in the four discussions is that individuals who are successful in this market are generally those who are able to look at it differently during times of uncertainty. Raoul said this is one of the best times in the digital era for infrastructure opportunities, and that it will take a number of years for any of the Layer 1 networks to reach any level of institutional adoption. Alongside Ethereum and Solana, XRP has been repeatedly seen as one of the few chains aiming to be part of this conversation. Meanwhile, the number of reports of tokenized real-world assets on the XRP Ledger continued to grow at a breakneck pace, reaching multi-billion-dollar figures, and institutional consultation with regard to using Ripple infrastructure for real-world asset tokenization continued to rise. Several of the transcripts indicated a more common thread. The worlds of traditional finance and blockchain infrastructure are no longer separate. They are slowly moving towards one another. Large-scale adoption was not yet a reality, as Ripple implementations on institutional platforms, discussions with DTCC, EDX Markets, tokenized bond pilots, stablecoin development, and cross-border settlement systems were all highlighted as infrastructure is being built in anticipation of the full arrival of big use cases. The clearest and most salient overarching notion was the notion of flip the switch. Not as an overnight fantasy, but as a way of describing what systems are already connected behind the scenes, and for institutions to achieve functionality rapidly when the various regulations, liquidity, and infrastructure are aligned correctly. The notion kept surfacing in Ripple partnerships, financial network integrations, settlement systems, and through statements by executives justifying that messaging systems and connectivity are already available. In fact, it is the very belief of investors that markets can change before most people know what is going on that makes this emotionally charged. While historically, there have been plenty of explosive crypto moves that started when investors were bored and excited, many retail investors argue that they don't stay interested during these periods. One transcript explained how the current trend looks like the previous consolidation periods of XRP, where public interest fell prior to substantial bull market rallies. Another speaker was almost all about mindset and said that for most investors, it is not that the opportunities were not there, it was that they didn't have a plan. They got emotional, or they were panicking during bad markets, and their decisions were being made by emotions. That mental factor permeates all the transcripts in various ways. We are always at war with fear and faith, emotional reactions, and strategic patience. From speculation to infrastructure building. And that's the tension that appears to be at the core of the XRP discussion at the moment. XRP price is not the only argument that argues for the bull market. It is the role of XRP in infrastructure. The transcripts continually reference real-world assets, RLUSD, tokenized bonds, Ripple Prime, EDX Markets, CME futures volume, and Project Acacia with the Reserve Bank of Australia, all as examples of institutional involvement that grows. RLUSD minting activity was called a signal of liquidity, wherein large amounts were being minted to prepare for use on various institutional platforms, new venues, and on-ledger markets. The explanation also in the context of RLUSD was key. Stablecoins are not necessarily issued in place of XRP. Instead, they can run complementarily, and XRP will continue to be the native token that will be needed for activity on the XRP Ledger. This is important because the usage of stablecoins on the ledger can still create utility for XRP in the background, even when it's not directly visible by the user. The same notion emerged in the discussion about tokenized government bonds and programmable settlement, where it was shown how XRP Ledger infrastructure can be applied to more efficiently issue, trade, redeem, and settle them in a digital format. This is the point at which things become more significant than a regular crypto price forecast. It's more about the ongoing transition of financial markets to programmable and always-on infrastructure based on tokens. A number of transcripts describe this change as one that institutions are now planning for, not retail's problem to try to imagine. Ripple Prime's tie-up with EDX Markets was also said to be significant, as it has backing from top Wall Street entities and is also linked to huge institutional liquidity. The principle is straightforward. The public will not fully appreciate the significance until much later if the institutional rails exist. Which is why the conversation regarding XRP's exits from exchanges, the whales who are shifting significant amounts of XRP, and the new wallets being created were considered to be some form of noise and not an accumulation sign. But it was not just the hype. A few speakers also noted that markets are still uncertain, dull, and bad for the heart. There were a number of factors cited for why that may not happen right away, including the Clarity Act timeline, legislative delays, crypto market boredom, macro uncertainty, and weak retail interest. This is crucial as a realistic script should always be focused on both sides. While there are compelling longer-term stories to be told about XRP, the patience, planning, and emotional discipline of investors are still required. This was made abundantly clear by one transcript, where a successful investor states that they need to know the exact amount of XRP that they have invested, the cost basis of those investments, and what a profitable target amount may be for them. If the basics are lacking when volatility shows up, people can easily get emotional. They might panic sell before their strategy is in place, or they may hold on tight without realizing what success means. What the actual message is throughout the transcripts is opportunity alone is not a generator of wealth. Preparation does. The investor who knows the infrastructure, knows what's going on, knows the regulation, knows the liquidity, knows the tokenization, and has their own plan for leaving or making a profit, is playing a completely different game than the investor who just waits for a magic price. The difference could be the difference between the 90% who fail and the small handful who do benefit when the market finally does move. Perhaps the most significant underlying message in all four dialogues is that it's possible that those who benefit the most from this cycle aren't the loudest voices on the internet, traders who are constantly looking out for every candle, and investors who are constantly refreshing charts every 5 minutes. This could be the people who are able to see where the infrastructure is going and are emotionally stable enough to wait it out, rather than pushing in. There is a common theme across all of the transcripts, that the market is shifting from speculation to systems designed for utility. Tokenized securities, stablecoin settlement, real-world assets, institutional clearing, cross-border payment infrastructure, digital collateral, 24-hour settlement markets. The ideas were all around, but they seemed to all converge to a single theme. Blockchain technology is slowly becoming a more integral part of the financial infrastructure and less of an experiment. The XRP community is confident that the rise of XRP and Ripple are making a significant difference in that evolution. The idea being sold is that the infrastructure is being built behind the scenes, via DTCC talks, Ripple Prime integrations, tokenized government bond trials, stablecoins, and even CME futures expansion, while most retail investors are still only interested in the immediate price action. That disconnect leads to frustration for many investors when hefty price gains don't come along with every partnership announcement or institutional offering. However, some speakers cautioned against that point of view. Markets move unevenly. Infrastructure develops slowly. Regulations take time. Adoption may take place behind the scenes before it is known to the world. And historically, many investors become convinced to the contrary during these slower periods. Hence, emotional control has been a central theme in the material. One transcript noted that individuals do not succeed because they panic, trade emotionally, or they never make a realistic plan. One said that investors have a habit of walking away from positions when markets are flat, even when it seems behind-the-scenes evidence of institutional positions still grows. Others minded more to emphasize patience expressly, saying that riches has to be built slowly and steadily, and that people might not reap the full benefit of the overall trend if they constantly let emotion drive their decision-making. No one said for certain what outcomes would occur. Actually, several of the known uncertainties repeated several times. Legislation may not move as quickly as may be desired. Interest in retail may be weak for extended periods. There may be a continued trend of market consolidation. Volatility may intensify. XRP, however, is still showing up in many of those talks, but no matter the uncertainty, the overall trend of institutional finance seems to be growing more interested in tokenization, blockchain settlement systems, and programmable financial infrastructure. That is a future that is uncertain, but it seems that some investors expect to see the kind of generational wealth it will take to create. The people watching XRP closely right now, however, are likely to know that the market is quickly moving into an important turning point that will see utility, infrastructure, and institutional integration become much more significant than that's currently known. If the scenario of these conversations is correct, and if such a transition actually takes the form indicated, then the most difficult aspect for many investors will be in identifying the opportunity. It could simply be to wait patiently, be informed, and keep a healthy check on your emotions long enough to see the potential before the market does.